Or are you not sure how to report the observed one? With today's session on SAR STR compliance, we hope to address your concerns related to suspicious reporting. To elaborate on the do's and don'ts of the subject, the best practices around goAML reporting, we have an experienced AML professional with us today. I'm glad to present Ms. Dipali Vora, a distinguished qualified company secretary with 7+ years of experience in AML and corporate governance. She has shared her treasure of AML knowledge with hundreds of people with personalized AML compliance training. Her understanding of the regulations and how she offers practical insights to easily navigate the compliance makes her session informative and empowering. Before we get into the session, I would like to inform you that in case you have any questions on the topic, feel free to post your questions in the Q&A section. This webinar is being recorded and will be uploaded on our YouTube channel. And one more thing, all the participants will get the participation certificate. So, yep, without much ado, I would hand over the show to Dipali. Over to you.
Thank you so much. Good morning to everybody for taking time on Sunday morning and being part of this webinar. So let's straight away jump on to the topic. Second. So before we start with, suspicious activity report, suspicious transaction report, let's first get some background about what the AML UAE structure, law structure is there in United Arab Emirates. What are the prevalent laws which are there in United Arab Emirates? So first, there is Federal Decree Law number 20, which was issued with respect to regulating money laundering and combating of financing of terrorism and financing of illegal organizations. There is Cabinet Decision number 10 of 2019, which is also to be referred. So basically, federal law tells you that you are required to do certain compliances, but cabinet decision tells us that how you will comply with the regulations, how will you comply with the federal law. So cabinet decision at times is also as referred to as the implementation regulation. Cabinet Resolution number 74 of 2020 talks about how are we going to implement targeted financial sanctions. Why are we required to screen the customers before we onboard them? There are certain other guidelines which are issued by our ministry for sectors. Like, for example, we do have special guidelines for, real estate sector, gold sector, then trust and company service providers. We have separate guidance notes which are issued, which will help us to understand that, how do we implement in our company, how AML structure could be more strengthened in our company. Apart from that, there are other uh, you know uh, regulatory authorities like ADGM, DIFC, which have come up with their own rule book, which could be referred also, where there are certain more rules and regulations which the companies which belong to those specific regulatory authority are required to implement as well as comply with. So they have ADGM has a special, they have a separate rule book which they are required to comply with, in addition to federal law, cabinet decision, and cabinet resolution 74. So this will always be the base, but there are additional guidance notes and rule books which are imposed on those specific sectors and companies. So this is the basic AML structure, with respect to compliance in United Arab Emirates. For the ones who are attending this seminars for the first time, I would just take few minutes to explain this particular structure to you so that you have the idea that where are we, and what topic we are going to discuss and what are the basic structures in AML CFT compliance in United Arab Emirates. First and foremost, let's first understand that AML CFT law is applicable to which companies? It is applicable to financial institutions, DNFPB sector, and virtual asset service provider. Under the definition of DNFPB comes 5 sectors, that is real estate sector, dealers in precious metals and stones, auditors and accountants, trust and company service providers, and fifth is lawyers and notaries. These are the 5 categories of companies which come under the definition of DNFPB. So all of this, the companies which I discussed, they are required to get themselves registered on goAML portal, which is mandatory. So basically, all of your reportings, all of your, the covered transactions which you are required to file goes through goAML And finally, the final destination of all of the reports is Financial Intelligence Unit. At the time of registration on goAML, you are also required to appoint compliance officer. Once this is done, the next very important step is AML Enterprise-Wide Risk Assessment, EWRA, also known as. In this particular part, you are required to understand your company, your products, the kind of the customers that you're dealing with, the kind of the transactions that you're doing, how are you accepting money, how are you onboarding them, are there any intermediaries? Okay, so basically it's going to be risk assessment of all of your customers, your transactions, and the delivery channels that you adopt. And in this, we are going to holistically understand what are the risks of my own company and what are the mitigation measures in order to deal with the threats of the AML CFT. That is something which is to be done in the AML enterprise-wide risk assessment. Once this is done, we come to know that what are the risks. I'll just give you a very one single example where if you know that you are dealing with majority of TEPs, or if you are dealing with majority of the clients who are high net worth individuals, so you have to you're required to have some strong structure in your company with respect to dealing with that kind of risk. So what risk, what control measures, that all will be mentioned in the enterprise wide risk assessment, as well as that will be reflected in the fourth step, that is when you define your AML CFT policies, procedures, and controls. So this is, I would say, these are the documentation part. But when you actually have to put this particular policy into practice, first is we are required to do KYC of all the natural persons, all of the companies that we are dealing with. At the point of KYC, point number 5, we are required to have ID proof, address proof, then we screen them. So screening can be done manually or through the software. Now, in this particular part, we have certain reporting obligations, like filing of fund freeze report, filing of partial name match report. But in what cases we do that? Whenever we screen a person and we find a match with respect to UNSC consolidated list or UAE local terrorist list, only then we file FFR, that is fund freeze report. In case if we are having some kind of funds with us, we freeze them. And in case if it's a new customer, we straight away reject that client. Then the next part is submission of PNMR. In case if we screen a person and we believe that there is a possibility that this could be the same person, but you're not 100% sure. Okay, in that case, you will file partial name match report. And whenever you screen and you find no match, means that's the best thing. You've not got you screened a person and you did not get any match. That means you can then go on to the next part, that is risk profiling. Risk profiling is at this stage, you are going to evaluate the risk of your customers and bifurcate them into low risk, medium risk, and high risk. Now, this particular topic was already taken up in our previous webinar. Okay, that is also available on our YouTube channel. You can definitely look at it, where you will get more insights on how to classify the customers into low, medium, and high. So basically, just to give you a brief, in case of risk assessment, you analyze that particular customer's profile, from where they are coming from, what products or services they are looking for, how did they come to know about you, how did you onboard them, how are they completing the transaction. On the basis of all of this, you assess the risk of that customer and classify them into low risk, medium risk, or high risk. In case if it's a low risk or medium risk, if you see this, you can continue business with them. In case after this stage you come to know that your customer is high risk, then you will apply enhanced due diligence measures. Enhanced due diligence measures means in case of address and ID proof, you will also ask for source of funds, source of wealth wherever required. We have to make sure that the first payment is coming from their own account and senior management's approval before we onboard them. Now, in this entire process of onboarding a particular customer, providing services, completing the transactions, at any point of time, if we see some suspicion, we can then report SAR and STR. And this is the topic that we are going to discuss at length today. So before I start with this, just to continue this particular, infographic, we have to make sure that our customers' data, which is with us, is always updated. In case if there is any change with respect to that particular customer's profile, we have to make sure that we are asking for that information, and if required, we will also complete the entire KYC process again. In addition to that, we have some record keeping requirement of 5 years. With respect to DIFC and ADGM, there are different requirements. For ADGM, it is 6 years. You have to maintain the data for a period of 6 years. Apart from that, there are other such requirements, that is appointment of an independent auditor, getting your AML audit done, submission of DPMSR RER report. This is also something that we're going to just touch down the topic. AML CFT risk assessment report, conducting the risk assessment on a regular basis, periodic reports, semi-annual reports to senior management, filing of annual reports for those companies who come under DIFC and ADGM before the timeline, HRC, reports, and mandatory AML training for the compliance officer and the staff. So this is the basic AML CFT structure in United Arab Emirates. Now we look upon what are the different types of reports which could be filed by us when we log into our goAML account. What are the different reports available? Which are the reports which are available to specific sectors? So there are around 8 reports which could be filed by us. That is SAR report, STR report, suspicious activity report, suspicious transaction report. SAR is filed when you observe some kind of activity, and STR is when you want to report a particular transaction that is already done or you have received some kind of funds in your account. Then comes high risk country transaction report, high risk country activity report. Now, high risk country activity report is to be filed in case if you are expecting some kind of remittance or you are going to send something amount to high risk countries. As per UAE law, it's Myanmar, Iran, and North Korea who are high risk countries as per the definition. So in case if you're going to associate or if you're going to expect some kind of remittance or you're going to send some money there with respect to these 3 countries, you are required to file HRCA report, okay, before like the activity that you're expecting. Once that is done, we wait for a period of 3 days, that's the cooling off period, and after that you actually continue that transaction, finish that transaction, and after that you are required to report high risk country transaction report that okay, the transaction is already done. The next report, which comes under which is specially for dealers in precious metals and stones sector, is you are required to report all the transactions which are done in cash above 55,000 dirhams or in wire transfer. Okay, that is something to be reported by filing DPMSR reports through your goAML portal. We are also required to upload the identification documents. Like if you are having a transaction with me, I'm an individual. So you are going to submit my EID or passport. In case if I was a resident in UAE, you are mandatorily required to submit EID copy. If not, the passport will work. Then comes the second report, which is specific to real estate sector and the lawyers and notary sector in case if they engage themselves in transactions with respect to real estate. Now, this particular report is to be filed by, as I said, lawyers and real estate in with respect to the transactions which involve, cash element more than 55,000 dirhams for freehold property, purchase sale of freehold property, okay, and the cash element or virtual assets, all proceeds of virtual assets is involved in that particular transaction, then we are required to file REAR report. Okay, now let me just clarify one more thing. Here we are talking about the transaction between the buyer and seller. We are not talking about the commission that we earn. This is something which the clarity is required, that if you are assisting somebody in a transaction, that is your client, with respect to purchase sale of real estate, only then you're required to file real estate activity report. The last 2 reports, that is fund freeze report and partial name match report, these 2 reports are to be filed in case if that's actually a part of the screenings that you do. Whenever you screen a person and you find a match with only 2 lists, as I mentioned, UNSC consolidated list and UAE local terrorist list. If it's 100% match, only then you file fund trace report. And wherever you have a suspicion that this could be the same person, suspicion with respect to the identity I'm talking about, when you screen a person and you think that this could be the same person, in that case you will file partial name match report, that is PNMR. So now the main topic, what is a suspicious transaction? A suspicious transaction could be, a transaction which is at the initial stage, that is at a proposed level, or it is in progress level, or it could be a completed transaction. Now, a transaction which at any three stages, if you believe that, it is an outcome, okay, that the amount which is used is an outcome of some criminal activity which is punishable under the act in by way of misdemeanor or felony. Misdemeanor is something which is less severe, and the term would be anything less than 1 year. Felony is a very serious criminal activity which one has done, and the term would be anytime greater than 1 year, and there are serious punishments which are imposed in case of felony. If you believe that a person who is coming to you for any kind of services, products, okay, and the money which is involved is related to any criminal activity, okay, that is one of the thing that you might consider in order to conclude that this is a suspicious transaction. Now, there are basically certain types of criminal activities. To give you an example, it could be drug trafficking, arms trafficking, extortion, counterfeiting currency, counterfeiting and piracy of products, bribery. If all of these activities, if you believe that, you have a reasonable belief that this could be this, only then you can consider a particular transaction as suspicious. Now, second is being related to the crimes of money laundering. Maybe a person who has come to you is not actively doing that, or he is not the first person who is doing it, but he's acting as an alliance. He's a part of some organized crime where he is doing some kind of money laundering, financing of terrorism activities. Then you can also consider that particular transaction as suspicious. Or if a person is trying to come to you and they might ask you certain favors, that create a company, maybe that appears to be very legal, but the intention would be to create layers, to create layering. So that could also be considered as being intended to be used in an activity related to such crimes. So if you have reasonable cause to believe that the money which is used for that particular transaction, or the services which they're asking for, is related to some criminal activity, then you can consider a transaction as suspicious. Now, one more thing to add. When you believe that a particular transaction is suspicion, it's not our job to investigate, get deep, find proof, find evidence. No. If you believe that there is something, suspicious, fishy, weird, okay, then you can directly file an SAR or STR. We are not required to give any evidence that, okay, this person has done this. If you believe you found some adverse media, you have found some match and screening, or when you Google about something and you find an article which says that, okay, this person was involved in some organized crime, you can believe that, okay, there is a possibility that the profile of that person would be risky. So now let's understand the difference between suspicious activity and suspicious transaction. In the previous slide, I discussed with you that a transaction could be considered suspicious at three stages. First, when it is a proposed activity, proposed transaction, or when it's in progress stage, or the final stages that you've already provided the services and it's a concluded transaction. Whenever you whenever the transaction is at the proposed stage or in progress stage, where you are still discussing the transaction, it's an unexecuted transaction, it could be considered as an activity. Now, the possible scenarios would be that, the person is not providing KYC documents, or, he's not cooperating, he's not sharing the UBO details. So that could be a reason that you can consider that person suspicious. And in that case, you will file suspicious activity report. Whenever the transaction is already done, completed. But later on, you realize that, okay, the transaction which I had done in the past was a suspicious one. You can file suspicious transaction report. Okay. Now, one very important thing to note here, the responsibility of filing suspicious activity and suspicious transaction report, okay, is of the compliance officer, and there is, there is no such limitation period. There is no such cap with the law says that, if the transaction value or volume is of a certain amount, only then you can file it. There is no such thing mentioned in the law. So whenever you realize that, okay, maybe the transaction was done 1 year ago, but today you realize that, okay, that was a suspicious one. So when you realized it, you have to take immediate action. Okay. Even if the transaction value is of one dirham, still you can go and file it for suspicious transaction and activity. Any which ways, there's no funds involved in that, but that is something that has to be kept in mind. There is no such limit to be with respect to value or volume, and there is no such limitation period. So one should not have that belief in the mind that, oh, it's such a small amount, why will I file SAR, why will I file STR? No, that is not the case. Even if the transaction is of the smallest amount, okay, still if it is suspicious, it is our responsibility that we report it. So here, I hope it's very clear that what is the difference between SAR and STR. Suspicious activity is basically where the transactions are unexecuted. The funds are not transferred in your account. So in that case, it is still an activity. So you have to file suspicious activity report. And in case if the transactions are already executed, or you have received some part payment, or the funds are already transferred in your account, in that case, you can report suspicious transaction report. So let's look at some examples. When we can file a suspicious transaction report. If we come to know that as a part of ongoing monitoring that we do for all of our clients, we come to know that any of our existing clients, for some adverse media has been circulated, or some criminal case has been initiated against that particular client. If in a transaction, if there are multiple parties involved, which makes no legal sense for involvement of so many persons in one transaction, you can opt to file suspicious transaction report. If there are a lot of transactions which are done within a very short period of time, like maybe if I could give you an example, if there's a dealers in precious metals and stones, and if they have agreed, when there are B2B companies, if they've agreed that in a month they're going to buy this much only, okay, but they exceeded the volume value of the transactions have increased a lot without any intimation in advance, that could be a little weird. Okay, but of course you have to evaluate and then take a call. Transaction value is not something which is the value of transaction which a particular customer is trying to have with you is not in line with that particular customer's economic profile. Okay, the transactions which they're carrying out are of huge amounts, but they are not able to present a proper source, legit source of funds to you, or source of wealth to you. So that is also something that could be considered, and an STR could be filed. If the transactions gets changed at the last moment, when everything is fine, engagement letters are signed, you've initiated the services, everything is going on well, but last minute they ask, the transaction is completely changed, or maybe they even cancel it. Okay, even that could be one of the reasons that you could opt to file an STR. If they are insisting the payment in virtual currencies, okay, that is also one of the reason where STR could be filed. If any of your customer is involved in highly cash intensive businesses, so even that is something for which an STR could be filed. The type of the transaction that they are proposing to have with you is very different from their main business activity. To give you an example, if it's a non-profit organization, and if you are a dealer in precious metals and so on, and if they come to buy for you a necklace, that's very inconsistent with that particular non-profit organization. Or if a non-profit organization is buying a villa, okay, so these are inconsistent with their main business activity. So even that is something which could be considered at the time of filing an STR. When an SCR could be filed. So SAR would be at the stage of a proposed transaction, or if it's an in progress transaction. If that person is refusing to provide the KYC details, if they are refusing to provide the UBO details, if they are acting on behalf of some undisclosed principal as in they are not the person who are taking the decision, or they are not the beneficiary of that transaction. Okay, so that is something weird. There is somebody behind them. That person could be sanctioned, that person could be criminal, who cannot come and face the world directly, and they're using some money mules to complete their transaction. So that is also to be considered at the time of filing suspicious activity report. If there are too many intermediaries, or if the proposed transaction, the proposed customer who is trying to have a transaction with you is a sanctioned individual or is related to a sanctioned individual. There are certain instances which have actually happened with some companies where they have completed everything, and if you ask some more documentation, they will cancel the transaction, that no, we don't want to work with you, just because you've asked some more documents as a part of your KYC rules. If a company is trying to have a business with you without any proper government licenses, or maybe the company is belonging to some other country, but at least they would be registered, there would be some register under which they have got the license to work. So even that is something that they can't present it to you, or they give you a feeling that okay, we are registered, but when you ask for the documentary evidence, they are unable to prove it. You will there are also certain other cases where the customers try to they insist you to keep the transactions off records. Okay, not to put in records, don't give me any documentary evidence, it's okay, give me cash, etc. That kind of favors if they ask, that is also something which should be reported. If a person is trying to have a transaction with you without any economic sense, okay, if for example, for a TCSP, if a company already has a good network of companies and they are insisting on incorporating 10, 20 more companies, okay, this is I would say this would actually mean that, this is just a process in creating more and more layers for that particular company. So even in all of these cases, you can consider filing SAR, suspicious activity report, because the transaction is at a proposed stage or it is at in progress level. Now, the process of filing suspicious activity and suspicious transaction report. So ideally what happens is the first line of defense, that is our employees, okay, and the person who are directly going to face the customers, those are the persons who will see a suspicion. Identification would happen at that stage. So when they realize that, okay, this particular person or a transaction is suspicious, they are required to file and report it to the compliance officer by filling out an internal suspicious activity report or internal suspicious transaction report. Now, the employees will fill internal SAR STR report, submit it to the compliance officer. Now, the compliance officer is now required to make sure that as and when he received it, he is required to conduct an investigation, internal investigation, and take a decision whether it is to be required to file with financial intelligence unit or it is not required to be filed with financial intelligence unit. Whatever decision the compliance officer takes, that is to be documented. And if he decides, if the compliance officer decides that it's required to report it to FIU, then it is the complete responsibility of compliance officer to file it with the goAML report without any delay. In this entire process of employee reporting it to compliance officer investigating, taking a call, filing it with FIU, this entire part, we have to make sure that complete confidentiality is maintained. By any way, the subject matter or any other person who is related to that particular customer should not be informed that this kind of investigation or an internal investigation has been started against that person. That would tantamount to tipping off, and tipping off has attached fines and imprisonment associated with tipping off. So that one thing we need to keep in mind, that complete confidentiality has to be maintained. So once we have already filed it, we can refer this particular SAR STR filing checklist to make sure that in this entire process of filing SAR or STR, we are not missing on any of the aspect. This particular checklist is also available on our website. First, you may check whether there is anything suspicious. We have observed that, that is why internally that report has been filed. So point number 1 and 2, we click yes. Is the internal SAR STR include the details of the suspicions observed, or if there were any red flags which were noted with respect to that particular suspicion or the customer? So we say yes. So so after this, I would say that the internal SAR and internal STR report which we have drafted, we have to make sure that all of these elements are covered in that. So the person, the employee, the person who is facing the customer who has observed that, he can report it effectively and he can give as much as information which is available with him through this particular internal SAR, internal STR form. Now, whether the compliance officer has internally investigated, whether he whether the compliance officer has documented that who were the parties involved, what was the activity, or if there was a transaction, what was the location of that incident, what is the date and time of that incident, and why are we filing, why was this particular internal SAR STR we got it. After conducting the investigation, or during the investigation, did the compliance officer made sure that he used those keywords which means that there is a suspicious activity, like maybe fraud, scam, or lot of deposits, huge cash involved. So that is something, whether these keywords are used or not. Did the compliance officer document the decision? So if after investigation, compliance officer might have to decide between a yes and a no. If yes, then he has to proceed with filing it with goAML. If no, then why does he think that it's not required to be reported? If it was decided to report the suspicion, whether all of the available information and the documents, okay, were submitted on the goAML portal, or whether, and also whether the compliance officer has filed it without any delay. So without any delay, ideally it is not defined anywhere in the act, but in some of the previous sessions which we have attended of the ministry also, and some of the surveys which you must all will be receiving, they've always asked the question which says that whether the compliance officer has taken an action within 24 hours or not. So we believe that whenever a suspicious internal SAR, internal STR is being received by the compliance officer, the action should be taken within 24 hours. That is, filing has to be done. If the compliance officer decides, they should file it within 24 hours. So here we are asking that whether we have complied with the requirement and we have filed it without any delay. And in this entire process, have we made sure that we have stick to the concept of no tipping off? That is something that we click. So if we have all yes, yes, we are complying with all of the requirements. And if there is no, we have to make sure that, we have to improve, or we actually, this kind of, negligence should not be done at all. Once we have filed this report, what are the post-reporting actions? Once the SAR and STR is filed with Financial Intelligence Unit, they might issue some instructions. If the instructions are received from Financial Intelligence Unit, we follow them. Sorry. If the instructions are not received from Financial Intelligence Unit within the reasonable time, we can first delay the execution of that transaction. Delaying could be, you might give some reasons that, the server is not working, or the property is not available, the owner is traveling, or there is some server issue at our end, or that particular product is not available. By whatever reasons, as per your sector, you could try to delay that transaction. And meanwhile, also request specific instructions from Financial Intelligence Unit. If after requesting for specific instructions, if you receive those instructions, we follow them. If the instructions are not received, even after filing specific instructions, then we have to take the call that whether we want to onboard that particular customer, whether we want to continue with them, whether we want to have a transaction with them or not. Whatever decision we take, we have to make sure that the same is recorded. Recorded in the sense If yes, then why? If no, then why? But in any case, we should not have that in our minds that, okay, if FIU has not reverted anything, that means it's good to work with them. That is something that we should not have in the back of our mind. We have to evaluate, independently, that whether we need to, whether we can onboard or not onboard. Now, in this entire process, if there are some additional suspicions observed, we have to make sure that we can report it to the FIU as a follow-up to the original SAR STR. So what happens is, whenever we file a suspicious activity report or a suspicious transaction report, a unique reference number is generated. So that unique reference number could be used by us to communicate with FIU in future. So if you want to file something more, you can always write that reference number and you can report some additional observations also. So now we've already understood that, what is suspicious transaction, how do we follow that, what are the process that we need to follow, what is the difference between SAR, STR. Now, how can we attain the best practices with respect to reporting suspicions? We have to make sure that the first line of defense, that is our employees, are trained with respect to what are red flags, what is suspicions, in what cases they should be alert, and when an internal SAR, STR form should be filed by them. We should document the entire SAR STR process in our policies, regularly reassessing the risk of our customers. And in wherever required, we should mark them as high risk. And if you think that, this particular person, this customer is risky, you can also mark them as unacceptable and, gracefully end the customer business relationship and file reports wherever required. We are also required to document the red flags that were observed by us in a particular suspicious activity or suspicious reporting, whether the preliminary review that, the once the compliance officer received that kind of report, whether that review was done, what was the investigation done, and what is the final decision taken. Okay, now all of this has to be, documented somewhere. That internal SAR STR reports which are coming to you, you can have a column which would say that, okay, what is the outcome of the compliance officer's investigation and what decision is taken and why that decision is taken. That is something that we can always preserve. What could be done after then SAR STR is already being filed? Like, for example, if we have filed something, what is the approach that a company should have? Should the business be continued? If yes, what is the threshold that we will only work with them for the products or services amounting to X amount? If there are any additional controls that we need to take, like, for example, if it's a high risk customer or that we are dealing with, how frequently are we going to monitor them? 3 months, 4 months? Are we going to keep a cap on the transactions? Are we going to monitor the transactions? How they are, completing the transactions? Are we going to put some check on that? And in case in the past, if the company has come across some new type of risk indicator, okay, that was not mentioned in our red flags, you could add it to our red flags, and this could also be communicated to the employees that, okay, this is the latest practice or this is the latest trend, I would say, that is being followed by the people to launder funds. And after all of these reporting, the final part is you may just update the senior management that, okay, these reportings were done because of these risks were observed, and we have complied with all the requirements. So I will hand over to Jyoti for the closing remarks.
Thank you, Dipali, and huge shout out to all of you for making time on this at this hour of Sunday morning. Thank you so much. We hope the webinar was insightful and that you carry with you some best practices around SAR and STR compliance to foster your AML framework. Thank you once again. Have a great and lovely day ahead. Thank you.
Thank you so much, everybody.